Hello everyone and welcome to this next Masterclass series video from Sybiz, this time covering the fixed assets module. Apologies if you were tuning in to the live presentation. We had some problems with Microsoft Teams, even to the extent that it didn't even record for us. So this is a re-recording. We're doing it all over again, so hopefully this time will be better. Let's dive straight in. So what we're going to be covering is an overview of the fixed assets module within Sybiz Vision, having a look at the transactions within that module, a quick look at reports, covering some of the tips and tricks, and then what we're going to do for those that are yet to get started with the fixed assets ledger, we will have an introduction as to how to go about that getting started process. So obviously we're not going to cover that off the bat because there's people here that are already up and running, and so it'll be a bit tedious for them to sit through that. So that's why we're doing it in that particular order. And so we're going to just be glossing over the obvious, so we're assuming you do have some sort of knowledge of fixed assets. So the terminology that we're going to be using is just standard terminology within that realm. And as I said, we're going to save the getting started until the end. Just the usual disclaimer, we're giving you advice on how to use software, not how to do your books or how to comply with tax, etc. within your jurisdiction. So please get that professional advice from your external accountants, etc. where necessary. So just like all the other modules within Sybiz Vision, there's the concept of defaults and groups. So they're actually pretty simplistic in the fixed assets ledger as far as the defaults are concerned. It's just really covering your basic transaction settings plus automatic numbering. From a group perspective, there's a bunch of different accounts that come into play. You've got your acquisitions, so that corresponds to the fixed asset account in the balance sheet, and you could have different fixed asset accounts for different classes of assets if you so choose, or you could just have the single fixed asset account. That's up to you, but yeah, certainly if you are using separate groups, it makes sense to use separate accounts in some respects. The disposals account is essentially a clearing account, so that takes the cost of the disposal and allows you to sort of do what you will with it, depending on how you're actually dealing with the disposal, as to whether you're selling it, the items to staff or customers, or maybe you're transferring it to inventory, scrapping it. There's a whole different set of things that you could be doing after an asset's been disposed. So essentially this disposals account acts as a clearing account for you to then do whatever you like from there. The accumulated depreciation is that offset account for the fixed assets in the balance sheet, so that's the value of the depreciation thus far. So if you're yet to actually get started with the fixed assets ledger within Sybiz Vision, you've probably got your balance sheet accounts for the acquisitions and the accumulated depreciation already populated, and so we'll talk about how to deal with that a little bit later on when you're doing the go live with your fixed assets. The depreciation account is just your expense account, and the gain loss on disposal is exactly that, and the system actually calculates that for you, so we'll talk about that when we get to the transactions. And the maintenance account, that's not actually posted to, but it can be used as a reporting reference and also to guide you if you are looking to segregate the maintenance expenses against various classes of assets. Then this is where that account lives to guide you in that respect as well. From a lookups perspective, there's really only two that are functional in terms of the other ones are qualitative. They don't necessarily assist in the behavior of the software, just reporting and categorization, etc. But the two big lookups in fixed assets are your depreciation books, and you must have one company book, and that's the one that posts to the general ledger. And then you can have other books as well. So some people will have a tax depreciation book. They may even use a different frequency or different methods of depreciation for tax purposes versus their internal management accounts based on their internal accounting policies. And you could even have an additional tax book for an overseas parent company if they've got different methods that they use in their jurisdiction. Then you can also run your depreciation and keep your fixed asset books along those lines as well. Out of the box, we have 8 different depreciation methods. So there's a couple no-brainers there in terms of no depreciation and immediate write-off, and then there's the traditional straight line, declining balance, double declining, sum of year digits and units of production, and we're going to keep things pretty simple in this demonstration today, not talk too much about those depreciation methods. They're all fairly generic in terms of the terminology and how they work, so we won't spend too much time on that. And the other lookups, as I said, they're really there to categorize and help track various attributes of your fixed assets. So we won't sort of muddy the waters too much by talking about those things in too much detail, because they're more on the periphery. The fixed asset accounts themselves, if you've got lots of them, rather than sort of key them in manually through the user interface, you'd be using the import. We'll talk about that a little bit later in the context of the take-up for getting started. And essentially, when you create a new fixed asset, there's not a lot that you have to provide. It's a little bit different to the other ledgers, though. So you'll be assigning a group to dictate the automatic postings, and you will also need to add the depreciation book. So there's got to be at least one of those, and it's in those depreciation books that you choose the method and set the rate and frequency of depreciation. And you also set the acquisition date is not so much that's more of a transactional attribute, but the start date is the depreciation start date. We'll talk about this a little bit more as we go, but that's essentially when you want Sybiz Vision to start doing the depreciation. So that may differ from the acquisition date in terms of the acquisition may occur before the asset starts being productive. So just in general terms is to not take a hit and hope approach with the fixed assets module. Once you have performed transactions against an asset, if you see that you've done something incorrect, then essentially you need to neutralize that asset transactionally and then create a new asset. So it's not really possible once you have started processing transactions to correct all and sundry within that asset. It's generally a case of neutralizing it and starting again. So we'll talk a bit more about that as we go as well. From a transaction perspective, you've got your fixed asset journals, and there's different types of journal lines that you can have. So acquisition, that's self-explanatory, and depreciation, that's generally used unless you're doing manual depreciation, which isn't for the faint-hearted. The depreciation journal is generally only used for the accumulated depreciation when you do your fixed asset ledger take-up within the system. So the actual depreciation run, which is the other transaction we'll look at in a moment, is what's used for your regular depreciation calculations, and it automates all that process for you. The appreciation, this is one of the areas of confusion within the fixed asset module. It's not the opposite of depreciation. It is just to essentially increase the value of the fixed asset. If there's a revaluation that's done and it's an upward revaluation, then you would post an appreciation journal to take into account that increase in value. The flip side of that is the write-down. So again, if you were doing a revaluation of your assets and it was a downward revaluation, then the write-down is the journal type that you would use for that. And then the really cool one from my perspective is the disposal journal. And where it's really cool is it automatically calculates any residual depreciation. So if you're disposing of an asset, so this is being recorded on the 7th of February. So let's say we've calculated our depreciation to the end of January. We're now 7 days into February. So if we're disposing an asset today, it was last depreciated up to the 31st of January. So rather than having to go and manually fiddle with the depreciation on this asset, once we put our journal in dated today, it's going to calculate that residual depreciation for the 7 days of February and also calculate the gain or loss on disposal, taking that amount into account as well. We'll work through an example of that in a moment. And yeah, let's just move on now to the depreciation run, which is the other transaction that we'll be covering within the fixed asset module itself. So essentially, this needs to be run for each fixed asset depreciation book, and it's just a matter of selecting the book and then setting the depreciation to date and then clicking on generate lines. Now, as seen in the screen capture here, it's kind of reflecting the scenario that we've forgotten to do our depreciation at the end of December. So it's queuing that up as well for those monthly depreciation items. So we're seeing December and January's depreciation runs when we've clicked on generate lines. And that's all well and good to do that. You can do that and it will still post to the general ledger in the correct period. So the effects in your December books will be just those December lines, and similarly the January lines will do general ledger postings only in January. So it's sophisticated enough to handle it. My best practice, I prefer to run each month separately, and I am just keeping it simple and talking about monthly depreciation. So even if I was in this scenario and this is how I discovered that I forgot to do the December depreciation run, I would not process this one. I would click on the new button and basically put my depreciation to date to the 31st of December 2024, generate lines, just do my December run, and then immediately do my January run after that. That's just my personal preference, just to keep things separate there, but you can do it either way. And another point that I'll make a few times throughout this presentation is that there are various calculation methods of depreciation, and most, when you research them, most of them will sort of talk about a frequency of annual, and yeah, essentially there's different ways of doing interim calculations, and essentially if you do a manual calculation it may vary, but that's just one of those things where there are multiple acceptable ways of calculating depreciation, especially when you're doing interim within a year, but certainly when you look at it on an annual basis, you'll pretty much get the same calculations irrespective of which approach that you take. So I'll talk a bit more about that in a moment as well. From a reporting perspective, it's a bit like the lookups. There's around about 15 reports, but there's only a couple of them that are transactionally based. So the first one, the big one, is your depreciation schedule, which is essentially your one-stop shop for what's going on in your fixed asset ledger, and it's a very sort of standard report across accounting, so it should be something you're familiar with irrespective of what system you're currently using, and you probably see them in your tax returns as well that are prepared by your external accountants. The transaction history is the other transaction-based report within the fixed asset ledger, and then the other reports exist, generally your qualitative reports, so things like asset types, etc. And from a general ledger point of view, you'd also be at the very least interested in the balance sheet, and also I'd highly recommend the ledger reconciliation report. That's something you should be running even if you're not currently running the fixed asset ledger, but if you've got your ledger reconciliation report in your report sets and you implement the fixed asset ledger, just make sure that you do have the option selected to include your fixed assets in that ledger reconciliation report. We'll talk a little bit more about the depreciation schedule in a moment, but the screen that we have at the moment just shows you a rendition of that particular report. And yeah, as I said, it's your one-stop shop for pretty much everything that's going on in your fixed asset ledger. From a tips and tricks perspective, we'll talk about those first 7 bullet points in a bit more detail, but before we do, just that final bullet point, as I said, you may get variations between any manual calculations that you do for depreciation versus what Vision's calculating. So the Vision method is essentially based on daily calculations, so it doesn't matter whether you're doing a monthly frequency or an annual frequency. Vision's actually going to be doing on a daily basis and then putting that together to reflect the frequency that you've chosen. So you may get variations when you do comparison calculations for time intervals of less than 1 year, but when you're comparing annual depreciation with annual depreciation from Vision, it should be exactly the same. From a disposals perspective, as I said, this is my favourite journal because it does all the heavy lifting for us. It calculates the residual depreciation, and so in this example, we are disposing of the asset today on the 7th of February. It's an annual asset in this example, so it's had no depreciation calculation done year to date. So it's calculating, and I should just mention that this is from an Australian context. So for those in other jurisdictions, the Australian financial year goes from the 1st of July through to the 30th of June. So I'm getting my residual depreciation calculated from the 1st of July all the way through to the disposal date on the 7th of February. And then the system's automatically calculating my, in this case, gain on disposal from the proceeds of sale of this particular disposal. So that's pretty cool that it does all that heavy lifting for me. And so as a result, I don't need to go and manually calculate depreciation or manually calculate the gain on disposal. It all happens from that single line. So you'll see here, I'm just doing a single line disposal journal, and then when it does the automatic postings, it works out everything to do with that single line and makes my life pretty easy. From a corrections perspective, again, just to reiterate, this is not a hit and hope ledger. If you transact against a fixed asset and you realise you've done something wrong, you're probably going to need to scrap that asset and start again. So the concepts are you want to neutralise that asset. We'll work through an example in just a moment. Be mindful of the multiple depreciation books as well, in that you'll need to potentially deal with multiple books if you've got them set up. And yeah, you're essentially going to want to process a disposal at the written down value at the date of the last depreciation run, and then do some journals to essentially undo the depreciation charge to date at a general ledger level. And then your disposal account, once you've been through that, will hold the original acquisition value for you to base your corrective action off. So that's essentially going to be starting again with a new asset and making sure you don't replicate that same mistake. So typical mistakes are using the wrong value, using the wrong depreciation book start date, or using the wrong acquisition date. So once you've started transacting, if those kind of issues, or if the date-based issues are discovered before transactions are processed, then yeah, just go in and change the start date in the depreciation book, and that's all good. But if you have started transacting, you will need to take the corrective action and start again with a new asset. So this is just working through an example where we've accidentally acquired an asset at 100k instead of 10k, and we haven't discovered that until after the second depreciation run. So we've looked at our general ledger and gone, oh, depreciation seems to be a bit more than we thought it would be, based on what we know. And through that process, we've discovered that, yeah, we had fat fingers when we did the acquisition of this new asset. So what we're going to have to do there is dispose of that asset and also deal with the depreciation at a general ledger level. So you'll see the balance of my asset after I've put through the disposal value is now 0. So I've disposed it at the written down value of the asset, and then I've gone through and reversed the depreciation that has been charged to that asset at the general ledger level, and offset the other side of that to my disposal account, so that the value of the disposed asset is sitting in that disposal account ready for me to reapply and do my corrective action. So in this case, it'll be putting the asset in again at the correct value, and obviously dealing with that $90,000 variance that I've created through that initial process. So a little bit of a contrived example, but just taking you through that concept. From an asset pooling perspective, the pooling concepts, they're similar to the corrections, but you don't have to worry about undoing the depreciation on the individual assets. So essentially what you do is you create the new pooled asset. You want to make sure your depreciation calculations are up to date. Then you'd want to dispose of the assets to be pooled at their written down value, so there's no gain or loss on disposal. And then you'd use that cost base as the basis for the acquisition of the new pooled asset. and you'd go from there. Similarly, if you're encountering an issue of theft or loss or destruction, it's all pretty much the same from a fixed asset ledger point of view. You'll be, again, disposing of the asset because you don't have it anymore, and you dispose of it at its written down value, and that would go to the disposal account. And then depending on the nature of why this asset has disappeared and what's likely to happen afterward, you would then journal that disposal account value to elsewhere, most likely. And it could be that you subsequently get an insurance recovery that offsets that loss, or all of it, or some of it, etc., etc. So, or there could be a legal recovery, etc. So, yeah, those subsequent events are unknown at the time that you've done the disposal from a fixed asset perspective. So, as essentially your disposal account will just represent that balance in the interim until you decide what to do with it based on the nature of the event that has occurred. And we did cover the fixed asset journals and the depreciation run, but other transactions involving fixed assets are available in the purchase ledger as well. So you can acquire fixed assets through your normal creditor transactions. So that's from your purchase requisition all the way through to the purchase invoice. And that's an alternative to using the acquisition journal. And essentially, yeah, you need to create the asset account to include that account on the line of a transaction. And just be wary if you do use this method, because it is something where generally the transaction will predate the acquisition, whereas an acquisition journal is generally something that's done after the fact. So there may be some variables. So if you are starting with the purchase requisition, you don't necessarily know when that asset's going to get delivered to you and when it's going to enter service. So things like the depreciation start date and the acquisition date may not be known when you process the purchase requisition, but by the time you get to the purchase invoice, hopefully those bits of information will be known, at least the acquisition date, etc. So just bear that in mind, that it is a, even though it's doing the same thing, it's a different process and needs different considerations. So here we have a purchase requisition. The fixed asset line type is being used. I've done the right click add new to create the new asset on the line level, and then process my purchase requisition. It's been approved, and then we go through to the purchase invoice. And even though on the purchase requisition they use the wrong tax code, I'm able to change that and set it to the capital acquisitions tax code. Again, apologies for those outside of Australia that's using Australian lingo there, but yeah, it just shows that you can make changes based on what was in the purchase requisition if you do go through that process. So, and then it's pretty much doing a similar thing to your acquisition journal, where it is hitting your, in this case, the furniture and fittings fixed asset account within my general ledger balance sheet. So, so it's a different way to do the same thing. From a sales transactions point of view, there isn't the ability to add a fixed asset line, and the main reason for that is that you do need to go through that disposal process to create the gain or loss on disposal. So if you already know, if you've agreed a sale of that particular item with, say, a staff member or a customer, so you already know the value it's going to get sold for, when you do your disposal journal, that amount that goes through to the disposal account, that can then be pulled up as a general ledger line in a sales transaction, and that is what you sell rather than the fixed asset itself. So it is still possible to sell a fixed asset through the sales transaction process, but you do it as a general ledger line rather than the fixed asset line that we saw in purchasing. And the reason for that is that the disposal needs to occur in order for the gain or loss on disposal to be calculated. So it's a different process to the purchase. You can also transfer the asset to stock. So if it's an item that is indistinguishable from your trading stock and you want it to go back in to your trading stock, you can do that as well. So you do a transfer from elsewhere to create the item in inventory, and then use journals to transfer the value accordingly. The depreciation schedule report, one of the really cool things about this, and why we've isolated it rather than talking about it previously when we were looking at the report, is the ability to include estimated data. So this allows you to essentially do a projection through to the end of financial year as to what the depreciation amounts will be. So a forecast, if you like. So if you were looking to do like a forecast EBITDA calculation for the end of the year, then this would be a way to get that particular number. Obviously, it can only take into account what's known to the system. So if you are planning additional acquisitions of fixed assets throughout the course of the financial year, it's not going to know that information. Similarly with disposals, but it will at least be able to project based on all things being equal what the depreciation amount will be for the entire year. So it's a pretty cool feature with that report as well. Okay, so if you are already up and running with the fixed assets ledger, then that's all we've really got to talk about. You are more than welcome to hang around for the rest of it, but this final part of the presentation is really for those that are yet to get started with the fixed asset ledger in Sybiz Vision. So thank you all for watching. If you do have any questions that we haven't resolved, please send them through the Sybiz website. There were a few people that asked about things like finance charges, etc., and how that's handled. That's essentially a general ledger consideration rather than the fixed asset ledger. So irrespective of how you acquire a fixed asset, whether that's through finance or cash, etc., that side of the fence is handled through the general ledger, and the fixed asset ledger is sort of fairly agnostic as far as the actual method of financing used to acquire the fixed assets. So hopefully that's cleared that up for you. And let's get into establishing the fixed asset ledger. So one of the key considerations is the timing, and you do have a bit of flexibility here, so you can take it up as at the current date. It's probably best to do it at the beginning of a new period. Or you can take it up at the start of a financial year and reprocess the year-to-date events. So from a Sybiz perspective, when we went live quite a few years ago now, we performed the implementation in mid-October when our accounting department got the software from our development department, and we backdated our take-up to the end of June, and made our peace with the fact that we'd be doing a bit of reprocessing of additions and disposals, and also redoing the general ledger depreciation run for July to September. So that necessitated the general ledger effect, or the general ledger journals representing depreciation for the financial year to date. Again, this is in the Australian context from July. We reversed those out and then redid the depreciation runs. That gave us the ability just to sort of validate calculations that were occurring. And we actually did have a minor discrepancy between the previous manual calculations that we were doing and the system generated calculations, and through that process we actually found out that the system was doing the right thing and our manual calculations were flawed. So that was a good exercise to go through by sort of backdating and reprocessing partway through that financial year. So there's different options there. In terms of establishing the fixed assets ledger, it is a separate module, so unless you're on one of the business pack bundles that includes it, you will need to license that module. It is best to set some time aside to allocate test runs. It is something that you should be able to do within a month, and we recommend that you get started soon after you've done your end of month processes when you've got a bit of time, and there's no reason why you couldn't be live by the end of the same month. And yeah, the longer it drags out between your initial sort of getting started and testing, etc., to your go live, there's a lot of interim events. So any disposals and acquisitions that happen in the interim, you're going to have to sort of bring them into your process as well. So the tighter timeline you can work with by allocating some time to it, it'll make it the go live process a lot easier for you. So obviously you're going to need to prepare the information to put into the system. So you possibly already got that in a spreadsheet, or it could be with your external accountant, or it might be in another system. And the other thing, just to make a point of as well, is that your balance sheet is probably already reflecting your fixed assets. So you're getting those figures either from another system, from your external accountants. So we don't want to replicate that information when we do our imports, and I'll discuss how we avoid that. And from the process overview, again, I've mentioned it a few times, you can't really wing it when it comes to fixed assets. You do need to try and get it right, and so we do recommend that you go through a testing process. So the process that we recommend is, in your live data, set up your defaults, your groups and your lookups, and any additional general ledger accounts that you need for those fixed asset groups. Get that right, be happy with that, and then plan your go live date. As I said, it can be retrospective, depending on what system you're coming from or what process you're currently using. That will drive that decision in most cases. And get your data ready, and essentially you're going to be creating a copy of your database in conjunction with your business partner for a test run, or in most cases it's going to be more than one test run. And then you import into your test database, process depreciation or other transactions as well to have a bit of a play with, check to make sure it's all okay. And then once you're happy with that process, you then repeat the imports into the live data. So we'll just talk about that in a little bit more information. So from the defaults perspective, the fixed asset numbering is probably the only one to emphasize. We'll have a look at that a little bit later as well in the context of the import. So we want to turn off the fixed asset automatic numbering while we do our imports. And the other options within the defaults are just mainly around the transaction numbering and various transaction options. So we won't worry too much about those because they're fairly similar to what you'll find in the other ledgers throughout Sybiz Vision. From a lookups perspective, again, we talked about this a bit earlier, where you've got your two that sort of really dictate the behaviour of how your fixed assets work. That's your depreciation methods and your depreciation books. The other lookups are either shared lookups, such as the analysis codes, document categories and sort codes, or they're qualitative attributes that are optional against your assets. So because they're peripheral, again, the aim of today is not to confuse things and muddy things, so we're just going to push them to the side, but just know that they're there and you can use them if you so wish. From a fixed asset groups point of view, this is essentially for separation of postings to the general ledger. So if you don't want to separate the postings for your various classes of fixed assets, then just use one fixed asset group, simple as. Similarly, you might want to keep your fixed assets in the balance sheet in different accounts, but you may be happy with the depreciation expense just going to the one account. You can do that through groups as well. So, but just bear in mind, you may, through this process, need to create new accounts within your general ledger. So the reason we create a copy of the database is because there's virtually no chance of getting this right the first time around. So it's best to err on the side of caution and not put it into your live database. So once you've done your groundwork in your live database, so you've got your defaults, lookups and groups and any new accounts that you've needed to create, that's the timing of when you want to create that copy database, and that's what you'll be using to trial the import process. And generally you'll do this 2 or 3 times, but the good thing is that it's a process that you accumulate the corrections into the same data set that you're going to be using in your live data. So you're not throwing the baby out with the bathwater, you're improving the information that you're importing so that it can be used for your live database. So for importing fixed assets, what you need to do again is just make sure that the next fixed asset number is set to automatic numbering off, because otherwise the import will say no. And there's multiple fields that you can use in the import for fixed assets, but the 3 that are necessary are your code, description and group. If you are using those other attributes like custodians and locations, etc., obviously increase those fields within your spreadsheet that you're importing. But we're going to keep this simple and just push those to the side of the plate for now. But certainly, if you are going to be using those fields, then include those fields within your spreadsheets and your test imports. The fixed asset depreciation books have a bunch of fields as well. So you've got your fixed asset code, depreciation book, depreciation method, percentage and frequency, and the start date. And we'll talk more about those in the context of some actual numbers in a moment. But the key thing to note here is that there is a difference in the code field. The main reason for that is just to add an extra layer of protection to stop you importing the wrong thing or attempting to import the wrong sheet into the wrong fixed asset import. So that's why that's different there. And then the fixed asset journals, they have their own bunch of fields as well. So the fixed asset is actually the code. So again, it's a different name for the same field, just to create that extra level of protection. You've got your depreciation book, your posting method. So that in this context is your acquisition or depreciation. Your description and reference is up to you. The transaction date we'll talk about in a moment in the context, excuse me, of an example. Similarly with the post to GL, because we are doing the take up and we already have the fixed assets and the accumulated depreciation represented in our balance sheet, we don't want to post to the general ledger. The account isn't relevant, but it's a field that needs to be in the import spreadsheet, and then you have your debit and credit fields as well. So let's have a look at that with a bit of data on the screen. So the first one is just your fixed asset. And I should just point out here that we're keeping this very simple. You could have hundreds of records within these sheets, and the only level of complexity that adds is that there's just more rows in the spreadsheet. But operationally, what happens with a single line or two lines is exactly the same as thousands of lines. So we're keeping this nice and simple with what we see on the screen. So the fixed asset import, again, that's just the code, description, and group. If you had those other attributes, like your custodians and location and asset types and all that sort of jazz, that would also be part of your import spreadsheet, but we're just keeping it nice and simple. The fixed asset depreciation book, again, has those attributes that we saw on the previous screen. And the fixed asset journal, we're doing two lines here because we're bringing in the acquisition and depreciation at the same time. And we'll talk more about the dates on the next screen. So just, and we'll emphasize this a few times because this is probably where most people make mistakes when they're going through the process. So if we can save you at least one iteration going through that testing process, then all well and good. But essentially, you have your depreciation start date, which is the date that you want Vision to start doing the calculations. So where that sort of interacts with the depreciation take-up journal is essentially you're going to be saying, okay, this is my accumulated depreciation up to this particular date, and then we want the Vision depreciation start date to be the day after that. So in other words, we've used our other system or manual records to calculate the depreciation up to the end of August, and we want Vision to take over from the start of September. The acquisition date is also important to talk about. That's the actual original acquisition date of your asset. So it doesn't matter if that predates the transaction dates that you're able to use at from a transaction perspective in everywhere else within Sybiz Vision. It is the original date of the acquisition. So, and we'll talk about that a little bit more as well. Okay, so just to reiterate those points from the previous slide, this is where most mistakes are made, so it's a good one to pay attention to. So the acquisition date is the actual date of the original acquisition of the asset, and that can predate your active accounting periods within Sybiz Vision, and so that is that one. The accumulated depreciation, i.e. the date at which you enter for your depreciation journal in the fixed asset import, that is the date before you want Sybiz Vision to take over the calculations for depreciation. We'll emphasize that in just a moment as well. And the depreciation start date of the fixed asset depreciation book record, that should be the day after the transaction date of the accumulated depreciation take-up journal. So hopefully not confusing, but just to sort of isolate that by looking at the dates in our example. So let's just say our Sybiz Vision system date, so the default transaction date in our system was the 31st of January 2025. Our acquisition date for that asset was the 1st of January 2022. We've decided that we want to sort of rerun a bit of depreciation, etc. And so we're backdating our go live a few months to the end of August / start of September. So our accumulated depreciation, therefore, is being entered manually up to the 31st of August, and we're asking Sybiz Vision to take over the depreciation calculations from the 1st of September 2024. And so what that looks like is after we've done those imports and we go to do a depreciation run, just to reinforce those concepts yet again, is that the first line that I have here is for September. So I've said to the system, we want you to start doing the depreciation from the 1st of September. So this monthly depreciation item has calculated each month from there up until the 31st of January, which is my current processing date within Vision. So that's the way that works. As I said previously, I'd prefer to do month by month depreciation runs, but just for illustration purposes, and also to illustrate the point that I made earlier as well in terms of those sort of interim calculations. So we have months here of variable days, so there's different amounts of depreciation that's calculated on a monthly basis because there's different numbers of days within those months. So that might be different to the method that you use for calculating monthly depreciation, but just to point that out while we're here as well. So again, this is something you do in your staging database, just to make sure that the numbers are as you intend. But if not, you've got to tweak your import, start again with a fresh copy of your testing database, and improve upon that process. Okay, so let's continue with that process. So you perform your checks, you'd run your reports, make sure they are in line with your expectations. If you are happy at that point in time, you just run through some dummy transactions in your test database just to make sure you're comfortable with acquisitions, etc. If you have found there's some issues, tweak your spreadsheets and re-import into another copy of your staging database, and get ready for that go live. So as you're tweaking those spreadsheets, as you're going, you're improving them not just for your next test, but also for your go live. So it's an accumulative process rather than throwing things out each time. And once you are happy, import into the live data, and then you're up and running. It's a good idea immediately before you import into the live data just to do a backup, just in case any mass imports. That's best practice to do that anyway. So our simplified approach that we've taken there, as I said, we've pushed to the side some of those additional qualitative attributes of fixed asset accounts, just to keep things a bit clearer. Just as you're going through that phase though of your initial preparation and getting things ready, just be mindful of the interim events that occur, so any acquisitions and disposals that happen between the start of preparing your data for import and the eventual go live as well, and just work out whether you're going to add those kind of things into your existing data or wait until after you've gone live and then retrospectively do those acquisitions and disposals again in your live data. So there you have it. That is the Sybiz Vision Fixed Assets Masterclass. If you're yet to get started with the Fixed Assets Ledger and you'd like to get that process rolling, jump on our website, contact us via the contact form, and we'll work with your business partner to start the process. Similarly, if you have any questions that we haven't covered today, ping them through that same process, and we'll do our best to get back to you on those. And other than that, we'll leave you to it, and thank you for watching. Cheers. Bye.